So let's start. We won't have a longer conversation today because it's again. I'm going to show you on the. I'm going to show you on the daily. So on the daily channel for Ethereum, I'll show you the space that we've been moving in over the past 2 weeks because it's been a tough space to navigate. It's been the hardest. So Ethereum looks slightly different from Bitcoin, and the reason being is it had a beautiful level accumulation here. There it had the breakout that met the technical target, and there now I believe it's making its peak formation. So this is the peak formation week, and it's making its decision whether to come down or not for the 3 steps down, or to use what happened here as accumulation for the next level up. So that's the big question. Are we going one level up or are we retracing back down? Now this part here was beautiful to trade because we had such nice swings up and down and up and down. So we would catch a part of this swing up and then the other part, and this would be for about 2 weeks, yeah, and we would catch 1 week one part of the swing, the other week the other part of the swing. So brilliant to trade, very nice range trading. Here was the breakout that caught us by surprise because I thought it was gonna go one more swing down, like it had one more swing down, but it didn't. It actually, despite it, there was a rejection here. Yes, there was a down candle, not a down candle, a doji candle here. And it looked like rejection, but it was above the 20 MA on the daily, and it did continue upwards. Now, the hardest week to trade were last week and this week. And that is because we are in this super small range. Like last week, at least we had a little Bart Simpson, sort of like a short Bart Simpson formation. It was a bull flag, like this was the bull flag. It didn't meet the technical target, it only met the target of this channel, so this accumulation. But now we started coming down, but it was more of a level coming down to slowly, very, very slowly and very gradually retest the 20 EMA on the daily. Again, the 20 EMA on the daily hasn't been retested, and I believe it will. So that's why the 1540, I have a target, a technical target for the channels as well at 1540. So this week we had this beautiful, where did the week start? The 31st was Sunday here. So we had this beautiful sideways space, and it was great to catch, and we said we separated it into different trades. So this is the part that I particularly like, the putting of the W's, the ticks. So clone. We had this part here, and then the second part here, because it's the safest way to trade this area. Take your profits here, wait for the retrace, go in for this. Here, this was very dangerous to trade upwards. I wouldn't have longed here to save my life, to be honest. So the downtrend has started. The peak formation level is confirmed. I wouldn't have, I know that it generally retests the peak formation. I know that this is a pattern, but I wouldn't have longed it. So the safest thing here to do was to follow it down. Now, here's the tricky part, because it has come down, but it hasn't reached this part. So this might look like a giant 1-2 for another swing up. So I'm not happy with Ethereum. If I were in a short in Ethereum, I would put my stop loss at entry point or stop loss above the 55 EMA on the 1 hour, really tight, really tight. I'd rather let it settle if I get stop lossed out over the weekend. Generally, trading over the weekend is not a great idea. It's range trading, it's low volume. You end up spending a lot of time. Better wait for the New York session on Monday. See what setup you have on the day. Trade Monday, Tuesday, Wednesday, Thursday. Have a beautiful break on Friday, Saturday, Sunday. Again, over the past 2 weeks when I got caught because I placed a trade at the end of Thursday, one on the end of Thursday and the other one on Friday. They looked so good though. They looked perfect. So again, that confidence to me is a red flag from now on. Now, what do I want to do? Remove this. So longing here. Now shorting. So shorting, yes, if you had entered here and you started shorting, brilliant, happy days. Though I would have taken profit here, like seeing this higher low, higher low here, higher low here, higher low here, I would be like, no, I'm taking my profits. I'm getting paid, and then I'll see what it wants to do. And because it still hasn't reached, it still hasn't reached. Again, the technical target is 1540, which is the 20 EMA on the daily, and I believe it will, but it will take a little bit of time. I don't know what I did there, except all I think I do.
I think we have volatility tomorrow with non-candles. Maybe the market's holding up that.
Say again, Neil, with what?
The non-farm payrolls.
I thought there was something that the market's been waiting for. Yes. Yeah, that must be it. To me, it looks, whenever I see, now I know, this week taught me why there were so many stop volume candles, because the market is being held. And I didn't know if I don't know if it's anything. So the payrolls are where? Is it in the States or is it Europe?
Yeah, States 1:30 p.m. So New York.
Tomorrow.
Yeah.
Okay. Okay. I think it is that, but it's also, I believe, what's happening in China at the moment. Like there's great financial unrest in China. And it's like because the media is so controlled, and whatever gets out is very much hushed. There are major things happening financially in China, and if China falls into a recession, or there will be a financial resolution or decision or whatever happens there, I think that will lead to another leg down. But it looks to me, I agree with you, that the market is waiting for something. There's too much containment. There's too much containment. Containment like this is build up for something. So yeah, I'd only keep my short open here with a tight stop loss, because it can snap up and do another leg up without looking back. There was, yeah. Like I know there was, usually after big moves, there is a period of consolidation, but this period of consolidation, in my opinion, was incredibly contained. Like even this could be more tradable than what happened here and then what happened here. Like this is 5-minute trading max, 5 minutes max, like I would say even 3 minutes. Whereas this one is like and again I'm measuring the middle part, this one is an 8%, 9% range. This one is great. This one is proper 15-minute swings. You can actually see the 1, 2, 3, 4, 5 on the hour. So yeah, let's see what's gonna happen tomorrow. I honestly hope my Bitcoin trade meets the target. I put my stop loss a little bit under my entry point, because I don't want to carry it through the weekend. I need a rest from all the watching that I've been doing over the past weekend, especially because I was heavily DCA'd, and being heavily DCA'd when Bitcoin could go to 30K, being in a short, oh God, I did not want to nurse that capital through that pump. Yes, so that's the way I see. I'm still keeping the same levels for ETH, so the same levels up, and that's the beauty of where we are right now. We're keeping the same levels. There's no need to, I don't know, do any other TA because we've kept where we are. So there's no there's no barely any maintenance to be done to the charts, but wait and see which way this goes. If it goes past the 1670, I would say we're going up for a leg up, unless it's one of those wicks that you don't trust and you'd rather wait for a couple more candles. Wait for a couple more candles until you get some more confirmation on other time frames or some other indicators. But yeah, be very tight with your stop loss and take profits as frequently as you can. So if something gives you a nice profit for the day, get paid for the day, enjoy the rest of the evening, go back to the charts tomorrow and see what the market offers, because there will always be a trade. Monday, Tuesday, Wednesday, Thursday, there's always a trade. Do you guys have any questions about ETH?
Just have a general question that may be obvious.
Yes, don't worry about it.
It's like confirmation. I like confirmation.
Yes.
And that is going back to what you were talking about after the big move and it settles in a pattern.
Mm-hmm.
Generally speaking, there's not going to be a big move again.
No.
So that's when we have either no stop loss or a big range on a stop loss, we can recover our mistakes more than likely because it's going to work in a certain range. And as it gets to the end of the pattern, that's no longer the case, because if it makes a big move on the breakout, it may not come back to our range for who knows how long.
Michael, you've said
we're not the market maker, so we can't wait 2 years to recover
our vectors.
Plus we're paying interest on it and stuff. So basically, that's a correct understanding of that, or? That
is impeccable. That's exactly what I said. That's exactly what I meant. Yes. So after a big move, there's gonna be some consolidation. The nature of that consolidation is the big variable, because that consolidation can be in nice swings within a beautiful range and we can trade those, or it can be choppy sideways, in which case, again, you will get used to it, Michael. Like, you have to go through these choppy sideways to, for instance, place a trade somewhere around here at this double top and say, oh my God, it's a double top, we're coming down, and wait it out until it actually starts coming down. So that's the rite of passage. So you see that some consolidations are choppy, some of them are very tradable. But even those consolidations have an end. So the first two thirds of a pattern are beautiful to trade. The final third of a pattern is where things can happen. And here, of course, ETH kept its nice level, so this was beautiful to trade. Again, that's why I choose to take risks in these times, because I know if I keep a close eye on it, there will be a way out. I know this because I got out so many times. But there comes a point where it gets really, really tight. For instance, think about how it would have been to enter along here, and this was all the space. And you entered along here because you saw this consolidation. You saw this as a bull flag. It's going for another leg up. But instead it does this, and it actually met the technical target of this, if I am to measure this. to a T. So here, this was tradable, but this one was not. And it was about the day 25th of July to 25th of July 3 o'clock, 25th of July 20 hours. So it was 20 hours of choppy sideways. And again, if you get caught here, so if you enter along here, put a stop loss underneath your I would put a stop loss underneath this low here. If it breaks this previous low, I'm stepping out and I'm gonna watch what happens, because this might happen. So you will see it break, you will see it retest. On this retest here, this rejection on the 1 hour, on the 20 MA on the 1 hour, you could enter this beautiful short and take your money. If you're there to do that trade. Now we have to make trading a sustainable life choice and income providing choice. So we can't, there are moments when, of course, we will have broken sleep, or we'll wake up at night, and because we have a lot of money in the trade. But most of the times it's good to do the trade, and then when you go to sleep, you put your stop loss, you take most of your profit, you let it run for your target. If it hits the target, happy days. If it doesn't, you've already taken 75% of the profit and you're out. So it has to be manageable on a living level as well. So we don't have to burn ourselves out before getting there. Because I know how excited you can be at the start, and you feel like you're missing something if you're not there. There will always be another move. So yeah, that's it, Michael. I'm waffling now, but that's exactly what I said. So 2/3, great, very nicely traded in the range. Third part is where we have to start being cautious. And if we're lucky to get another third complete, then there will be some gains. Because this is where, now this part here is where most of the orders are collected. There are loads of orders here collected as people are piling in on the longs and the shorts. So a lot of liquidity. And if the shorts don't pay themselves, they'll get liquidated by this pump. So that's why paying yourself when you see levels holding is the way forward.
I have a question.
Go for it.
Are you mapping out 15-minute arcs? Because I'm having trouble mapping out 15-minute arcs at the moment. So if you look at 27th, on the 27th, we've had a breakout upwards.
Yes. Yeah.
So how do you map out your 15-minute arc from this big sideways consolidation?
Oh God, Neil, that is the hardest question. I'll show you how I would do it. So this would be the 15-minute arc. I will use this as the third drop. Now, there, okay. How can I, do you know what? No, I won't use the triangle. I will use the ABC. Okay, well this is not helping me greatly either, because it's so this is an ascending arc, Neil. I'll take it out. I'll take it out and I'll put trend lines. This is an ascending arc, and you would need, do you know what, I'll map it out like this, because this, to me, this looks like it's breaking out downwards. So this would be the space of the arc. So this would be 3 steps up, and this would be 3 steps down on the 15-minute. So on the 15-minute, because the 1 hour arc is not complete. These here would be the third drop. Here would be double top. Here would be first drop. Here would be mountain peak. Here would be third drop, final peak, final bounce. There's no final retrace unless we take a little bit of what's happening here. And now we have our drop. So that's how I would map it. But I'm only mapping this because I have, right now, because I have my, where is it? I have these points of reference, and I could see that this was a double top and this was higher, so I'll take this as a mountain peak. So I can use this again. That is super for Michael as well. Because I can use this line of the arc. This is where your stop loss will be as well. So it's 16. It's going to be a little bit higher, 1630. So if it crosses this line, you see the beautiful confluence here between the 55 and the line of the arc. If it crosses back into the arc, then we're looking at a break out upwards. Does that make sense, Neil?
Yeah, but it's just like these patterns are weird because the way you taught us is we'll map up our divergence line from the 27th to the 29th, and then we'll consider that as the start of where we start to for an arc.
Yes, you're talking about, what do you mean?
Yeah, so like generally, like the way you taught us is one great divergence, and I would have seen that we've divergence around the 29th.
Ah, okay, you are right, but I think that will be a 5-minute arc.
Okay.
You are right to map it out like that. That would be the smaller arc. Absolutely. I see what you mean now. This like that.
Yeah, that's how you taught us it like a couple of months ago.
Yes.
Yeah. But it's very confusing at the moment with all this sideways. You can't really get. You draw an arc and then it does opposite to what you expect it to do.
Absolutely. There's a lot of volatility on both sides. And if you look on the 5-minute, and you're right, like, but you see, this would be more, because these are 3 steps up, and here, oh, it's very messy. Very messy. I'm only keeping the 1-hour arcs on, Neil. I'm only keeping the 1-hour arcs at the moment because the 15-minute would just be, wouldn't be reliable at all. So the 1 hour, and they wouldn't be reliable. I still follow the patterns, you know. So, for instance, if something happens, I'll show you on Bitcoin. I'll show you on Bitcoin how I follow the 15-minute. There we go. Okay. So I took this as a 15-minute descent, 3 steps down. I took this as double top, and I took this as mountain peak. Bitcoin's a little bit more, it's a lot easier to read. So I watched this, but I didn't map it out as a 15-minute arc because it will look very wonky. And then again, what happened here with mountain peak can happen with a lot of sideways. And then if I put, let me put the, no, let me put a triangle. The triangle is cleaner, but it gives me less, gives me less freedom. A, B, C, D. D should be here and C should be there. Perfect. Okay, there we go. So you see, it would look more like a channel rather than a triangle. And it would be very, very long, which might be the case where we are. Who knows how much sideways we've got left. But that's where the 15-minute pattern. So again, that's one of the things I was talking to Roy this weekend. It's hard to know which time frame the movement is on, because there's so much sideways, but at the same time so much volatility that you can't you don't know where this is happening on, like where, because this technically hasn't left the space of the 1 hour arc. Do you get what I mean?
Yeah.
Like the rule of the arc says, the rule of the arc, it's not a breakout until it breaks the highest point of the swing that started the arc. So if the arc starts with a swing down, the highest point of that swing, where that swing started from the previous arc, is the edge of the arc. So we haven't broken out. We came super close to it. It would be the 1950, and it would still be within the space of the 1 hour arc. And it is the space of the 1 hour arc because the swings are 1 hour swings, and they are really wonky swings. Like this is a zigzag. I was looking for patterns for Elliott waves, and the only explanation that I can find is this is a zigzag swing. This was the correction. Then this again was a 1, 2, 3, 4, 5, and now we're gonna get the correction. But the question that I have is this the correction of the swing? Is this one swing and the correction finished, one swing and the correction finished, and this is the preparation? So this is the final peak, final retrace, and then the preparation for breakout? And I don't know what to say, because we are in very uncertain times. Like normally, if I were to look at this outside of the fundamental context that we're in, this whole economic situation, I would say this is consolidation for the up. I would say this arc is going to break upwards, and I would be super, super pumpish when it comes to where this is going. But I don't know. Like to me, the 1 hour arc with the mountain peak still needs to correct, and then we're gonna probably have some more sideways and then head upwards. But I'm not sure.
Another question. The 15-minute arcs, they used to take like 24 hours. Am I?
No, that would be the
5 minute.
The 5 minute, yes. So the 5 minute takes maybe a day or two. The 15-minute might take 3, 4, sometimes even 5 days. The 1 hour generally would take about 2 weeks or 3 weeks. And then the 4 hour would take maybe a month.
Yeah, that was in the time that it wasn't sideways.
Yes, yeah, where there was, but now we have like this 1 hour has been taking, and again, I don't know, this might actually, hindsight will let us know. When these swings make up their minds and either go down, if they go down, this is a 1 hour swing. If they go up, then this was a 4 hour swing, and that's the breakout, and they were completed. So that's how I would read it. But it's very, I'm watching for the arc patterns and the movements rather than the time frames, because it's hard to keep the time frames and the levels and the patterns all together. But if it works, have you been trading the 5 minute ones, Neil?
No, but I've been trying to work out. I get confused because I don't watch arc mapping, but I'm trying to look out for the patterns. But I don't know if I'm mapping out a 15-minute or a 5 minute. all the sideways action. But I'm not really reliant on the art. I'm more reliant on the levels that you've been setting up,
Very good. Yeah.
because those are but it's just for extra compliments I'm looking for.
Yeah. Like I've been watching the pattern of the arc, as in the following either a double top or a mountain peak in reversals, because I was shorting and I was like, okay, this was double top, this was mountain peak, now we're coming down, and that gave me reassurance. But I wasn't trading those swings because I don't know how long they're gonna last. I can't trust the width of the arc anymore, because for instance, for Ethereum, this was here and then this is here. The height is enormous, and it is because it's coming down from a period of intense volatility, these drops. Neil, you gave me actually a great idea. I'm gonna start posting in the ARC chat. I'm gonna start mapping out the 5 minute and the 15 minute, just to have them, you know, as we go through. For instance, as we go through the day and we reach the New York session, or we've started the London session, to see where we would be on the day in the 15-minute arc. I think that would be a nice, how can I say, layer to add in terms of where do we expect price action to go. And then when we have the levels and we see them being held, we have confirmation that it is holding to go up for, let's say, mountain peak.
Yeah, that would be really useful.
Mm-hmm.
It was really enjoyable trading the ARC when I started back in January, February, but now it's just like all sideways type, unpredictable type activity, apart from kind of big 1-hour blocks.
Absolutely. I think they would still be enjoyable if we are very careful about entries and exits. So because it is choppy sideways in a small time frame, we need to, you see me jumping at a challenge. I'll take that challenge. Because it's choppy sideways, we need to be very tight about following the trade, because it will be the 5 minute and it will be the 15 minute. So we need to be on the ball when it comes to entries and exit if we're trading those patterns. But if we're layering the 1 hour levels, so the 1 hour levels will be our guideline, and the 15 minute will be our sort of how can I say, like an indicator almost. So we don't need to go with the 15 minute, but the 15 minute can indicate where this is going following the pattern, and then we layer that on the 1 hour range, and I think we will have a little bit more insight into where this is going.
That would be really useful.
Yeah. Yeah, I used to trade the arcs very nicely until, and I think it was the arc that actually until we got wrecked, and that was here. And the arc actually the arc saved me here, because here is where I was longing. I started longing here. So this is the last arc that I traded on the 4 hour, because I used to trade the 4 hour arcs. They are so beautiful because you can be in a swing and just do your thing, and you're just doing maintenance TA, and it's very nice. But you can tell, for instance, the length of this, how this was paced out compared to the space of this. So this took from the 29th of September to the 5th of April, 9 months. This is a daily arc, but this, within the daily arc, this is a 4 hour arc, and this one here is a 4 hour arc. I think, Neil, I have to check my notes for the duration because I think I forgot the durations. I remember that a swing in a 4 hour can last 2 or 3 weeks. So if one swing lasts for 2 or 3 weeks and there are two swings, so I think I might be wrong about the 4 hour lasting a month. I think the 4 hour can last 3 or 4 months with the initial and the last. Yes, I remember now my chart, between 3 and 4 months for a 4 hour arc. So the 1 hour is 1 month. The 15-minute is about a week, and the 5-minute is about 3 days. So that would be it. The whole of it, not the swings. I think the swings on the 5-minute are the intraday trades. That's now I remember the durations. So yeah, and here I was longing, and Roy was saying, oh, it's dropping, we're gonna make a drop to here, you have to exit your long. And I said, no, we're waiting for Mountain Peak. And I did wait for Mountain Peak, and that was great. But the problem was I took my profit, and then I thought here it was breaking through, we're gonna go even higher, but we didn't. And here,
I remember that one. That was the one. Was that the drop that we had an unexpected third spike with some news breakout? Was it a war or something?
it wasn't the war. The war was, we actually traded the war very nicely. You went into a long with me somewhere around here.
Yeah.
And we DCA'd on our way down, and then it came up and we took nice profits here.
Yeah. That was yeah.
Yeah, I think here or here, February or one of these.
Yeah.
It was a sudden drop. And then I learned, because I don't pay so much attention to fundamentals. Then I learned that war generally has a positive effect on the markets. It pumps the market somehow. Initially, that's the initial. Do you know why? I found out the reason for that. By the way, I'll tell you because it's really interesting. The thing that markets hate most is unpredictability. So when something negative is expected and something negative happens, that is not negative for the market initially. The market predicted that, so the market is going to pump because the market is pumping because it has foreseen that. So it wasn't something unpredictable. But when something truly unpredictable happens, like a black swan event, that's when the market crashes. But the war was expected, the war happened. Initially, it pumped the market, then it don't. That's why sometimes death crosses pump the market first, because people, I don't know, market expects it, and then they drop. I don't know who pumps the market. It must be the market makers. How can I say, escapes me, but yeah. So that's where I stopped looking at the 4-hour arc to trade it. I'm looking at the 4-hour arc / the 1-hour arc, because I think here we have 2 4-hour arcs, and this one here might be the same. The 4-hour might be the same as the 1-hour because of all the sideways, but I'm not sure. But the pattern still stands. There's still a double top. There's still a mountain peak. So yeah, I will start doing that, Neil. I'll start doing that because I'm again, I know that patterns repeat themselves. So I know there is consistency there. We just need to see how this consistency plays out with all the sideways, and it will be a great exercise in TA.
Yeah, so like that, the pattern in June, if you look at E in June before,
Here,
yeah, no, go there. Looking at I think that pattern's playing out now, but
this one, yeah, this one, it didn't have a mountain peak, I think. Let me see. May, No, it did, but it was a tiny one. This was it. This
This, not that one. You got a bit further back. So you got where we June, just before June 13th. Backwards.
Here.
Now, if you look at this sideways and then where we are now, are we preparing for a big? So you got this. If you look at 23rd of June.
20. Say again. 20.
23rd of
Yes.
May.
So 23rd of May. Here.
So you got your drop. If you keep going forward.
Here's where again.
You got your drop.
You get
and then
your
you got your
mountain
rise. And then if you look at where we are now, I'm feeling that we got the drop, we got the rise, we got sideways consolidation, and a bigger drop.
Yeah.
Mm.
Are you saying it's very similar?
From the way I've been looking at it, I think we're just from a pattern perspective. I won't trade to like patterns, but
you're talking about. So you're talking about this part here.
Yeah, this.
And this part here.
And where we are now.
Right?
Yeah.
Yes, I think it's identical, Neil. Like I'll show you a yes, it is. It's this. I think they might be slightly like this might be a 15-minute arc and this might be a 5-minute arc or something like that. But it's again the duration. But they are the same. They are the same. We might need another couple of. I think we're missing one swing. We're missing this one. Because we have, so there was the drop, here was the double top, here was mountain peak, here was final peak, final bounce, final retrace. Here's the drop. I think we have double top here. We're probably gonna come up for mountain peak. God, I think if short holders will hate that, but it might be mountain peak. Another drop, final bounce, final retrace, and then probably another drop. To correct
even 100 or 2000 and hoping for a drop for the macros.
Yes, I was looking. I wanted to add about the MACD. I don't use the MACD too often. I only use it for the daily. No, I'm lying. I use it for the daily and I use it for the 15-minute when I'm closely monitoring a trade because I have it on my Bybit, and you know how the Bybit on your phone works quicker than TradingView on the phone. So, or at least on my phone, TradingView seems to be a heavier software for the phone. There's always a little bit of lag. I think there's more data in TradingView. But this morning I woke up to both Bitcoin and Ethereum crossing over on the day. Now, if we check to see what happened when they crossed over, here they crossed over on the day. Here they crossed over on the day. Here they crossed over on the day. Now, it can cross over and then do some sideways like it did here. And there were a lot of attempts here as well. So that can happen as well. But if tomorrow we wake up and the MACD has crossed, there's, again, I would be looking for shorts. Well, not tomorrow because I'm not going to enter any trade tomorrow. And I don't advise you to because it's Friday. But if we wake up on Monday and the MACD has crossed over on the day, then I would say I would be looking for entries to shorts rather than, you know, chasing swings up and down. So yeah, I agree with you, Neil. And there are indicators that are saying down is the way.
Yeah, we just trade by a couple of days at a time or at a time, and change direction.
We have to see if this MACD is going to be backed up by losing support on the 20, which I'm pretty sure will happen. The problem is by the time it loses support on the 20, you might have the 4-hour being exhausted, or you might have the 12-hour, I think, has already hit the bottom. I know they can stay there, but still, it's like, again, if the MACD indicator holds down until Monday, it doesn't recover very quickly. But we do need to see where did I here. But we do need to see support from the other oscillators as well. Like the RSIs need to keep going downwards rather than, you know, say we're done and now we're going to bounce up, because those RSIs can give another lift to the MACD, like it happened here. Here it looked, so you see we might be somewhere like here, testing the 20 and then holding it, and then the MACD crosses over and gives another pump. So that might be the situation. And if I had a crystal ball, I'd say this or that is coming. But again, we can only do the TA and see the ranges, and then do the trade that's on the day. Okay, a super idea, Neil. Very good question about the 15-minute arc, and you gave me a nice idea to start posting, because I was thinking, usually as I post my TA, I don't focus so much on the arcs, because it's just the 1-hour one that I'm looking for. You know, I say, okay, we're waiting for Mountain Peak, or we're waiting for the third drop. This has to come. But it's good to have a closer view of where it is on the 15-minute one, because that will give us the trades on the day.
Yeah, thank you. That'd be useful.
You're very welcome. You're very, and I'm gonna have a lot of fun with that as well, because I enjoy TA. You know, as a trader, when you're watching your trades go, TA is it's like the Netflix, the Netflix of traders. Let's do some more TA. Very good. Now, I will show you guys quickly the trade that I'm in Bitcoin, just to understand how I used stop loss and how I managed it. Oh God, it was an intense weekend, because I was watching 2 trades and I have 4 DCAs in each, and I was looking forward to getting my profits out of them and getting my capital out of them, because I had a lot of the profits that I had made DCA'd in, so I didn't want to say goodbye to them. So I got caught in Bitcoin on the 4-hour, and I got caught because I thought here it did a small, it was an ascending arc, and I didn't know this was an ascending arc. Like again, arcs most of the times come back to base, but here it met the midline of the channel and it started pumping up. So I entered at 21.8 for 21.4 now here at the retest of the 20 on the 4-hour, and it did get rejected. It looked like it was getting rejected here. That's where I entered, because didn't even test it. I said, oh, it's not even getting to the 20. Happy days. I'm entering a short. I entered the short here. I DCA'd 3 times on the way up. So I got my entry up to 22.8, right about here, the 55. And I said, okay, this is the 0.5 is a 22.6. We're gonna get to at least a 0.5 correction, which is what Bitcoin does very frequently, not normally. Bitcoin doesn't have a particular level, but the 0.5, I said, okay, we're definitely getting to the 0.5. If we're staying below the 0.5, when it reached 22.5, I was thinking today about what to do, because there's a technical target that I have, and that technical target is 21.8, and it's basically this consolidation channel at breakout. I know my channels, I've seen them meet their target so many times. I trust them. I said, okay, 21.8, we're going there. But this afternoon I realized I've been waiting for this trade for, I don't know, 10 days now. I better take some profit. So at 2, I took, and again with the power of the DCA, because I have 4 times the amount, it was only 1.5, but it was 4 times, so I took about 50% profit. Again, not great, but still good. Like when you think you could lose 4x, but you're actually making money, you realize that this is a how can I say, a profitable situation. But also, so I took 75% of my capital out, so I'm only in with the initial position, but with my entry point at 22.8. So I kept the position, and now I have de-risked my position. I put my entry point, my stop loss at 22,750, which is a little bit below the. It's right about here. And the reason being is that it's the 20 on the 1 hour. Yeah, it's above the 20 on the 1 hour, and that's as much space as I'm gonna give this trade, because there comes a point where a trader needs to reset. And I think it's very important to take a moment after intense moments of trading to reset. And it's good to reset because it resets you emotionally, and it centers you back into what you're doing, and you can start fresh with fresh eyes and fresh mind, rather than carrying the weight of the previous trades. So to me, the reset is very valuable. So that's why I put my my stop loss a little bit below my entry point, so that I make at the moment the funding rate for me, the fees are positive, so I'm making money keeping my short open at the moment. So I'm not paying the fees for it, which is good. Sometimes you get to that. I wish I could explain to you how that works, but I'll do some more reading, because I sort of like have it intuitively, but I want to explain it more professionally. But yeah, so I put the stop loss, and that's why I advise you to use the stop loss and then to let it play out at the weekend, do its whole drama. If there is a major pump, don't worry, we'll catch the Monday, Tuesday, Wednesday, Thursday consolidation swings in that pump and make money. So there will be plenty of trades, but protecting your capital and protecting your mental energy, or saving your mental energy in this case, is good, because you might be waiting for a breakout for a whole weekend, and that breakout won't happen. You're just staying there and, you know, getting angry for not having, you know, spending time with your friends, or being outside, or doing something else. So
Quick question,
yes.
Mahalia. When did you enter the Bitcoin short? Was it the 27th?
It was, say again?
When did you enter the short?
Yes, it was the 27th, Neil. It was the 20. It was right about here, I believe. I think it 20. No. Here, there it is. The 50. This is what got me. This rejection here got me to think there's gonna be another leg down to the bottom of the channel. Here.
I was just checking the chart as you were speaking, and like 3 steps down, I could just see your teachings with topped out on the outside, projection from the candle, yeah.
Yeah.
There was so would you call this a pattern interrupt then?
Say again?
Would you call this a pattern interrupt?
Absolutely.
Yeah.
Absolutely. That's I don't think you caught the conversation that I was having with Michael at the start. So you see, patterns are very reliable. The first I was talking to Roy, and that we reached a conclusion why we sometimes get caught, and it's because for instance, over the past 3 months, it's only this month that we got caught. I got caught twice. Roy got only caught once. I got caught twice here and here, because the first, the 2/3 of the first 2/3 of a pattern are very reliable, and in the last third of a pattern, a channel, a wedge, a triangle, that's when the games start being played, and there may be a pattern interrupt, and there are ways for us to know as traders and to be sensitive. But you see, it's very hard because you build up your confidence about reading it. You read it well here, you read it well here. There are 4 swings that you've read well, even this one, the 5th one, brilliant. Here you have all confidence. Here you get out and say, okay, I've done it, happy days. And here you repeat the same mistake. Why did I repeat the same mistake here? What caught me was that they didn't go all the way down to complete this channel. They lifted up. And they might still complete this channel, but this was a perfect way to get some more liquidity in the game.
It's easy to know in hindsight, but if all the indicators say that you got 3 steps down, you got the reversal structure.
Yeah, but Neil,
Yeah.
like I'll be very honest with you. I was trading a 1-hour channel using 15-minute signals or the 15-minute rejections. So when the 4-hour, where was the 4-hour? Where did the 4-hour prove me wrong? Here, when the 4-hour broke through this, but that's the harder what happened on the 1-hour, because the 1-hour should give me the invalidation here. So if I entered here because the 55 was getting rejected, I should have exited here when the 55 was being retested, because this is not my trade anymore. On that small swing that I was trading down, if instead of losing support, price action is gaining support, step out.
It's very weird structure as well. Like, you normally expect a W pattern. This is like a V straight.
It was yes.
structure.
It was very similar to what happened. Where was it? This one, I believe I traded this, either this one or this one. I don't remember which one. One of these I traded on one day, and it was so explosive. I didn't even catch the bottom because I didn't believe it until I think it was this one. Yeah, this is it. I think I was chatting to Michael on the ETH chat. This one, and I said, this is not going to be confirmed as a long until it holds support on the 1-hour on the 20 EMA, and this is where I actually entered this long, and I took my profit a couple of hours later, somewhere around here. Didn't take too much, but it was a quick trade to make. But it was a V shape, so it was super quick. Yeah, they're doing there's a lot of, because you see, I call this sclerotic, because it's small volume and then big pump and then small volume again and then big pump. Again, if I'm looking with hindsight and I see, for instance, this scoopy motion, So I see this here, and then this here. I understand that between this and this actually accumulated for this. But it's
Right, I can see now, just on my charts, is like they ripped down from psychological high to psychological low. They came all the way down, and then that vector candle now just pumped up, just ripped through psychological low, psychological high, and then they based around that, and then just ripped out the range.
Yeah. And I was at that point. I wasn't willing to come out anymore. At that point, I decided, no, I'm not gonna take my loss. I'm just gonna wait it out. And I was gonna wait it out because also, look, this happened. Like I expected after this. This is where it gets. This is where I believe we all need to have the DCA games really, the DCA game really strong for us, because all the indicators will say, okay, we're done, we've topped out, we're coming back down, and this is what happens. So the 1 hour RSI is out of the box by a mile. Then we have loads of bearish divergences. And it doesn't, because the 4 hour now with that huge vector candle, the 4 hour has taken control of the move, and now the 4 hour needs to top out. And then we're waiting for the 4 hour to top out for days and days and days.
By that time, you trapped it too late, so you have to DCA again.
Say again?
I was just saying, the move was so fast that you haven't got much options to just play it out.
Yeah, I know. I didn't have an option. Well, I could have taken a huge loss, or I could have played it out. And I chose.
You don't take losses.
I don't want to. But you see, Neil, I could have gone with it. I could have waited to see which time frame controls it, and I could have made profits like that as well. But, you know, protecting your capital is a way of trading. I will be more adaptable. I promise myself I'll be more adaptable, because this, I'm not taking any losses, isn't always the most profitable situation. Yes, I'm protecting my money. I'm not losing, but I could be making more by going with it.
It all comes down to experience. You've lived through loads of recouping your capital after losses, so your confidence is a lot higher. It's not something that I would do, because it's all new to me at the moment.
Yes, absolutely. And I'm happy I got to show you guys. There were a couple of people. Lee and BFAM shorted with me here, and they were BFAM has been shorting with me and DCAing for a while now, and what kept me in this was the big picture on the 1 day. Let me show you, because everybody was screaming, no, we're gonna go to, and we all made sure when you're DCAing, you need to make sure you have your liquidation above the highest point it can go to, because you can't put 4 times the amount of money you have and not cover your liquidation. So we all had our liquidation for Bitcoin around 31K. And everybody was, not everybody, there were people saying, oh, we're gonna go up. But what kept me sane in all of this was the daily channel. And this was what I had in mind. Yes, because I wanted to show you on ETH. But yeah, so this was the daily channel, and again, I trust these channels, and I looked at this, and O'Neill said, oh, people who have been longing here since 20,800 are now sitting pretty. And to my mind, I thought people who have been longing from 20,800 should take profits now, because it's a double top. So if I had longed, I would have taken profits there, because this channel doesn't matter what, you know, the voices in the media or the YouTubers say or whatever TA, it hasn't broken out yet. Nothing has broken out yet. Yes, it's holding the 20, it's breaking the 55, but it hasn't broken out of the structure. So yeah, that gives me confidence, Neil. And again, I think you will have that too. After you know, you live through a couple of these, and you'll have confidence in them.
Yeah, what I find that's useful is morning sessions, because when you run over the MAs, that gives you a bit more confidence, because then you start back testing or just looking at previous MAs, and then you're like, okay, yeah, this can play out.
Yeah, absolutely.
Yeah.
I enjoy the way, like, I'm gonna add the because I'm sort of like how can I say, I'm planning this the sessions so that they serve you where you are at this level. And I believe the weekly session sets out the space for the week, and then in the morning we check out where exactly in that space we are. How is support? How is resistance? What's how can I say, what's the more likely move of the day? And then I love this session as well, because this session allows me as a trader, but also you to look back and see how things have been working out or not.
Yeah, it's easy to get your head wrecked. You get an experienced trader saying, just watch out for the 4-hour 20 rejected it twice, and as long as we stay under it, we'll be okay. But that's just experience speaking.
Yeah, and again, even those moments can have their pattern interrupt. There can be, that's I think where most people get head wrecked and also money wrecked, because you start trusting a pattern and you stop being responsive to the rejection. So you trust your pattern, and again, trusting your strategy comes first as a trader, but then being sensitive to the invalidation of that strategy. Like I had the invalidation points for Bitcoin, and how could I forget about that? For both Bitcoin and Ethereum, I put those invalidation levels on purpose, because you could see them play out as they played out. So it was really great to see the where did it disappear? I had a yellow line here. Yeah, right about here. It was really great to see that, for instance, an experienced trader will tell you, oh, if a level is held, then we're going up. Great. But then that invalidation, you need to be open to it and to react to it. So when you see that invalidation, you know, here at the invalidation, let's say you're longing from here for another leg up, but you see a double top here at the invalidation, and the invalidation is not getting broken, it's not being turned into support, then you have to make a decision. And that's where experience comes in making those decisions.
It's just harder as a swing trader, because as a swing trader, you're holding your trade for a long amount of time. So you've been sitting on it for a week.
Yeah.
And you want your profits. As a day trader, if you reach your validation, you'll be like, okay, I'll call it quits. But the emotional side gets tied in when you've been watching a trade through the night and throughout the whole week, and you want to hold on to it. It's just your emotions that are playing a part.
Absolutely. That's why.
Because you might break the channel, because But that invalidation might be just a fake out.
Mm-hmm. But that invalidation might be a fake out, but you've still taken your profits, and then you wait for it to confirm, and then you go in for the next leg. So because of where we are, let me take you to, yeah, this is the daily. You'll understand. I think my internet just froze there for a second. So because
So the question is like, you drew out your invalidation line on Bitcoin, but it's very hard to tell, like, should I use the 15-minute invalidation, or should I use the 1 hour, or should I use the 4 hour?
You use the 1 hour. So the trades that we're doing are 1 hour trades. The 4 hour gives us the background. What is the big move? For instance, the 4 hour for me, it told me today that the big move is down because the 4 hour was heading down. So the 4 hour, and again, the 4 hour was holding resistance. It was pushing down. The trade for today was definitely a down. But the trade itself is a 1 hour trade. So you're trading on the 1 hour time frame. My internet keeps dropping. I hope you can still hear me. So you're trading on the 1 hour. There we go. And if the invalidation holds on the 1 hour, let's say you're shorting and this is going long, and if the invalidation had held here on the 1 hour, I would have cut my losses and stepped out of the short, but it didn't.
Is that on the wick or the body of the candle?
The body, the candle needs to close above this twice. So first it breaks it, and second it has to close above it. So if this, for instance, this to me doesn't count as a, like, I need to have two bodies here, two bodies on the 1 hour. That's how sure I would like to be. The way, for instance, here, if you miss the one of these tops to enter a swing, let's say you see these two, you go into this one or whatever. But if you miss any of those, the next point to enter a swing is the confirmation of the breaking of the 20 MA on the 1 hour. The first one breaks it, and then you wait for another body to close it. So here is where I would enter. So this one closed below it. Well, the candle broke through and then stayed there. And then the second one here was here. So I would wait for 3 hours to enter this trade. I wouldn't take this wick into account. This wick is a distractor. This wick is just to distract traders, to confuse them, to wreck their heads. This is the head-wrecking volatility. But I would take, so you're doing 1 hour trades, you take your signals for entry on the 15 minutes so that you are super precise, but the confirmation and invalidation are on the same time frame that you trade. Does that make sense?
Kind of, but today we're watching the 4 hour MAs for resistance.
Because today the 4 hour took charge of the move. The 1 hour had done its job. The 1 hour was on the way down. The ones that had to, let me switch to Ethereum. The ones that had to jump in today, the ones that were holding us back. Where did they disappear? Okay, I'm waiting. The ones that were holding us back were very good, very good. Thank you for that, Neil. I understand. I think it's in the way I communicate sometimes, because the way I say, we're waiting for this to break, it's because I'm not talking about take your confirmation all the time on this time frame. Usually you take your confirmation on the 1 hour, but if the 4 hour MA is the resistance, if there is a 4 hour MA or EMA that's holding price action back, that's the one that you'll be looking at that moment, because the 1 hour has nothing to hold it. Like the 1 hour today in the morning, the 1 hour looked great to continue. I'll switch here. I can't change my charts because the internet is very patchy. But you get what I mean. Like we need to wait for confirmation on the 4 hour sometimes, because it's the 4 hour that now
I would say what she said is like a whole, if you're back.
okay.
No, I guess that's you.
Can you guys hear me?
Oh, good, you're back.
I am
You're
back.
back.
Yes. I am back now. Yes, the internet got very dodgy at the same time last week as well.
Yeah, we were just saying while you were away, it's quite confusing, like, because you guys have a read on the MAs, like, oh, yeah, this is watch out for the 4 hour today or the 1 hour. But we only know that because we enter the morning sessions. If we didn't enter the morning sessions, we'll just say, oh yeah, just 1 hour, always watch the 1 hour.
Yeah, I know, but it depends. True, it depends on the day, because and that's Roy's looking at how to go live in the morning directly, so that the session is available straight off. Because what we talk about in a session is what is happening at that moment, the setup of our day as traders. So the 1 hour, I was saying that usually, yes, it's watch the 1 hour, because the 1 hour is the time frame that you're trading, and you shouldn't ever change from one time frame to another. But if you're looking, for instance, today, this morning, the 4 hour was the one in ETH that was the resistance. The support. So the 1 hour, the 4 hour was opposing the drop. So that's why I say watch the 4 hour, because I watch what's holding price action back from dropping. This morning, the 1 hour gives me all the signals. So the 1 hour gives me, the 15-minute first gave me the signal. If I look to enter a short, if I look to enter a short this morning, I would have entered a short. Let's say if I missed this one, where would any of the stochastic be? They would not be. I wouldn't enter a short in ETH until the New York lift up. So this is where I would have entered the short here. And I would have entered the short here, having the rejection of the VWAP, having this 15-minute wick, having the breaking of the 20 and the 55. So but again, because I know it wouldn't be a super clear cut. This is not a beginner's trade because you don't have all your indicators lined up. It's not a clear cut entry. So let's say I would enter a short in a more clear-cut entry here. Let's say I caught this entry and I see the 15-minute doing its job, pushing it down, and here it's getting rejected, and then it comes up, it doesn't break that high, and the 15-minute is still doing its job. The MAs are looking great. There's the crossing. It's looking like an M. Beautiful. And then I switch to the 1 hour because it's a 1 hour trade. And again, the 1 hour MAs are doing their job. But the one, if I wake up in the morning and I see this morning at 10 a.m. we were here. Well, it was actually 9. There. So let's say I entered here. Throughout the night there was all this volatility, and I see this level. The MAs on the 1 hour are telling me a story, and that story says we're coming down. There's nothing holding it back in these two MAs at the moment. There's absolutely nothing holding it back. So that's why a trade on the 1 hour has its background on the 4 hour. And on the 4 hour, I check to see the background, and I see that the 55 EMA is holding price action. So that's where I can tell you, look for the 55, because that's the confirmation. But that's the confirmation in this trade. That wasn't the confirmation in this trade. That wasn't the confirmation in this trade. So this is where you need to understand how to read the 4 hour as a background for your hourly trade, because your hourly trade will be in a bigger picture on the 4 hour, and that 4 hour can stop the 1 hour flow or let it continue. Does that make sense?
Yeah, that was useful.
So
Yes, I have a quick question.
yeah,
Okay, I want to make sure I understand when you said don't change, you're talking about when the trade starts. If the trade is a 1 hour trade, it's always a 1 hour trade,
yes,
which means the 15 minutes are certain signals and the 4 hours the background. But then when that trade closes, if for some reason you're trading on a different time frame, you can change. You're saying in the middle of the trade, don't change and say, hey, this isn't really 1 hour, I'm going to look at it as a 4 hour.
exactly. Yeah, don't do that. Don't do that, Michael, because that's the only way to do that, to turn a 1 hour trade into a 4 hour trade, is to follow the 4 hour swing, which means to DCA, because the 4 hour swing is 4 hour swings are above 10%, and they would get you liquidated on your 1 hour entry point if it goes the other way around.
Right. Could you repeat that? I was having some trouble here.
Sure. So I said don't change the time frame, because the 1 hour trade has a particular length. The 4 hour trade has another length. The 4 hour trade generally is a lot bigger in percentages than the 1 hour trade. If you're starting to trade a 1 hour, let's say you're going into a 1 hour short somewhere around here, and you don't take your profit here, then this can happen. So the 4 hour trade has a bigger space, and the only way to navigate a transition from a 1 hour trade to a 4 hour trade is by DCAing, because the 4 hour trades are bigger than 10%, so they might get you liquidated. Could you hear me?
Yes, that's interesting. So you can change, or by DCA, you could also look at the DCA as, well, in one case, it's protecting you from going the wrong way by moving your entry point. But you can almost look at it as a total new trade,
Yeah.
or something.
Yeah.
And it turns it in DCA enough, it turns it into a bigger time frame. And enough, but also in the right places, which I still don't understand very well, but it takes time to understand that.
Michael, it takes, like, this is a layering of strategies. So I wouldn't tell anybody that got into trading change your time frames. So I
Right, I'll just leave it alone.
Say again?
For me, I'll just leave that alone for now.
Yes, leave. That's it. Just get used to sticking to the 1 hour time frame, and then seeing when momentum on the 1 hour. So we're taking the signals on the 15 minute for the entry, and then we're exiting with momentum on the 1 hour. As the 1 hour approaches, as the RSIs on the 1 hour approach the bottom, they're not there yet, but the stochastic is there yet, but the regular one is not. So as the regular one approaches the bottom, I would be looking to exit this short, because that is the 1 hour momentum coming to an end. And the 15-minute will probably give me the exact moment when that's going to happen. And the 15-minute hasn't bottomed out yet. So the 15-minute and the 1 hour, when this bottoms out, they will be aligned, and that's the moment to exit that short, that 1 hour short. What will come after that is probably another 1 hour short, but that will need to have, again, a reset and then a start. And the 4 hour needs to go with you. So the 4 hour is the background against which you check your entries and against which you check your exits. So if the 4 hour has again, sometimes the 4 hour can bottom out and turn before the 1 hour. Sometimes that can happen too. I won't spend time now in the charts, but that I know that can happen. So the 4 hour is your background. If you see the price action getting above one of the MAs on the 4 hour and holding it for support strongly, then that marks a change in momentum, a change in direction. Just the way, for instance, for me, this would have been a point, the corresponding point for my Bitcoin trade to leave. When I saw this, I could have taken a loss and left and been out of the trade. So yeah, the 4 hour is your background, the 1 hour is your trade, the 15-minute is your entry signals and exit signals, and to the exit signals you check the 1 hour momentum. So as the momentum approaches the end for your short, or as the momentum approaches the top for your long, you exit, and you exit with momentum. You don't wait for momentum to peak out. Sure, you can play the double top game or you can play the double bottom game, but you will be in it for longer when you don't have to. So take the 60% from the trade and 60% as in from the overall profit, and then let it play and let it turn to the next move. Am I clear in that?
Yeah, yes.
Yeah, thank you for that. Because sometimes I'm like waiting for these 1 hour trades and try to hold on to them for the 4 hour, because, like you said, your level one at 1443 at the bottom of the channel, that should be a good take profit level.
Absolutely.
But if your entry point was somewhere around 16, around the double top, even still, I should be taking my profits at 1443.
Yes, I would take most of Neil. You can take most of the profits there, and wait for a retracement, and then maybe DCA in. Like you've been trading a while, and you could do that, or you can just take the profits and then wait for the next structure to form, and follow it down. And if you miss that move down there, when it reaches the bottom, it will make a structure, and you can catch that in the opposite direction.
The one thing that prevents me psychologically from taking profits is just that, given that this big sideways movement that we've been on, our mind says that, oh, you should take profits at 1364. But given that we've been consolidating for quite a while, they're going to just ranges down and they're going to miss the move. But
I understand. I understand exactly what you're saying. I would take some profits constantly.
yeah,
So,
take 75% and leave a runner for 25 or something.
Exactly, and cover your entry point with a stop loss. That to me, because I that's exactly what I think of my Bitcoin trade. I don't think we spent all this time consolidating, and I think I said in one session, I don't think we spent all this time consolidating just to do a little bit, itsy bitsy little tiny little thing here, just a little lower low. We haven't done all of this for this. This is coming down much further. But again, this needs to hold as resistance. If this doesn't hold as resistance, then it can be very easily turned into a W, as we were discussing this morning, and head up for 27. And I'm not willing to have that battle. So yeah, leave a little bit in and then follow it down. I think, again, this is how most professional traders trade, to be honest, in these swings. I think I listened to somebody, I don't know where I know this information from, but they constantly sort of like milk a trade, you know? They take some profit, see it going up, DCAN, take more profit, see it going up, DCAN. So they can be playing a swing on the 4 hour that looks super choppy to us, and they could be collecting every single step of the way. They could be taking profits here, DCAing here, 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 which is where I want to be. Personally, as a trader, that's where I want to get. I want to get to trade this whole swing up and down, taking advantage of these swings. This is my next like professional trading target. I don't want to do these as separate trades. I want to do this whole swing up, know that it's going up, and then take the profit, DCA, take the profit, DCA, take the profit, DCA. So that's how I would like to trade. But yeah, to answer your question, take the profit, pay yourself, and you can DCA in on the next structure. If it looks good, if the next structure is a 15-minute top out and it's still holding resistance, then it's looking good for another leg down. I hope I'm clear, because I'm sometimes I get so many ideas that I want to communicate to you guys, and it is these particular practical intricacies that make trading difficult. And again, trading is not difficult, but our mind is complicated. So we need to spend as much as we have to understand the connection between time frames and the way the swings move and the types of swings that we might have, because some of them might be acute and up and down, and others can be sideways, and the sideways are the harder ones to read, in my opinion. Yeah,
it's difficult because I see that massive vector candle that they could just rename so quickly just above your yellow line.
This one here at
Go back to the
13.
Ethereum chart.
Yes,
Is this the Ethereum chart?
it is.
Oh yeah, so it's a vector candle. The 1510 vector candle.
Ah, yes,
That one.
that's one.
So and you've got your one of your take profits is at 1554.
Yeah, one of
And
my
I'm like,
take profits
this vector
is...
candle is so much close in range. And like, I want to set my profits just underneath that one.
I completely get you. I completely get you. I don't think we've done all of this to just drop down to here, to M1. I believe we're going to come down to at least 1510, to be honest.
Yeah.
At least 1510.
I'm going to do the smart thing and just take profits at the 1564 and then just wait it out. And if I think that's a good thing to do as a good practice.
Yes, Neil, it's all about collecting gains every day. Like Roy calls me a mercenary. Like between the two of us, I don't know if you've seen the difference between us, but I'm ruthless with my profits. I'm ruthless with my profits. Roy's more he holds a bigger space in his TA and in his trades, but I'm like in, out, in, out. I'm taking my profit. I'm getting paid every day because that adds up. And it is about having profits that add up. And then it is about having that confidence to do the same thing with bigger money. Because you do it with small money and everything's okay, and then you switch to big money, and again the emotions, there's a whole range of emotional training that you have to go through, and then when that emotional training is done, you get into the swing of taking your profits with big money. You take your big money out of the game and you pay yourself, and you pay yourself for the week, you pay yourself for the month, and so on and so forth. And that's how you make a living as a trader.
Yeah, I think, Roy's quite different. I'd rather just be able to sleep at night.
Yeah, that as well. Absolutely, that as well. Like I am so my mental energy is close to being depleted this week, because with 2 trades and 4 DCAs in each, 8 times my position, I've been waking up every 2 hours, waking up to see where it is. Even though again I was really nicely covered for XRP. I had like 48 liquidation. I knew that XRP was not going to pump 20% in a night, and then for Bitcoin 31. But it wasn't easy knowing that I had 8 times my position. So I made 8x so far from the 16th of June till now. That 8x was in the trade. That's how I see it, and I will fight for my gains. So I was really happy today that I managed to get 4x back, and 4x is still in the game. Well, it's not. It's at the moment it's 1.5x in XRP. That's how much I am now in the red, and I'm hoping to get at least 1x gains from that. But we'll see how that goes. Again, I will be watching it tomorrow, because XRP moved a little bit different from Bitcoin. It had a wider range. But yeah, sleeping at night is a great thing. But you know what? It's again, it's time under tension. I think it's part of heightening your emotional tolerance range, strengthening your emotional muscles, if that makes sense. Because you'll get, by the time you have your 4th or 5th rodeo like this, you'll get used to it. Unless you have a lot of money in to mind, then you'll get used to it. Very good. Now, do you guys have any other questions? I love your questions, by the way. They give me ideas, and they show me where you are, and also they allow me to explain the more particular refinements for the week that we've had, because you guys notice things about my TA that I do automatically almost, and I don't, how can I say, it helps me to see where I can communicate it better, so that you get it better, and you use it better.
I know that was great. We just it'll be good at the end of it, where we can get the precise levels that you get. Because we could do TA, but it seems that your levels do always hit. Might take a while, but we do get to them.
Eventually.
Yeah.
Yeah, I don't, Neil. That's a what you call it, a double-edged sword. It's something that has worked against me for a while when I was doing pattern trading, doing a pattern. So you see, when I got this idea when I was giving Michael an answer. So I started by pattern trading, then I started by swing trading on the 1 hour. Then I started I moved on to swing trading on the 4 hour. So I layered all of these 3 elements, and then the arc kicked in that made me organize my swings and my patterns a lot better. So now I'm doing the levels because I've worked with them so much from so many different angles. And I make sure that the levels are backed up by the MAs. Like the MAs are great help for levels. I don't use them for signals as much as I should. And again, they are great for signals. Roy is great at reading the MAs for signals. I don't, but for levels, I always do. And I think that's how they are. Do you want me to post this again, the levels?
Yes, please. But I guess we'll learn over time how to plot these levels out accurately, like yourself. Because you use a lot of confluences. Because when you're doing your weekly sessions, you'll just draw out, oh yeah, here's a channel, here's a technical target for the channel, and then you just quickly flick through MAs, and your boxes are perfect, and your targets get hit. But when we do that, sort of, our boxes will be slightly larger or smaller. I guess that will just come over time, right?
Do you know what, Neil? Yes, but I can also tweak my explanation to show you step by step how I get those confluences. Now, I didn't learn to set these levels from anybody. Like I learned it myself, and I watch out for confluences given my understanding of patterns and the MAs and how they work together. But when I do the weekly session on Monday, it doesn't matter if you're there or not, because I'll record it and then I'll post it out. So it will be a weekly session for the trade setup. And then when I do the trade setup, I will do it as a level setting training. So rather than, oh, this is where, I'll go by the rules that I apply, and I'll tell you the rules that I apply. I'll be more organized in my presentation, and then I'll do it as a training, and we'll get the trade set up as a result. Does that make sense?
Yeah, that would be really useful, because some of the things that you do intuitively may not be so intuitive to us.
Absolutely, yeah.
Yes, great. That's will be very helpful. Even with the information, we may not be able to do it as good as you do right away. But there's a lot of steps that, well, maybe you've shown all the steps on occasion or over several times in bits and drabs. But if you can, like you say, come up with sort of a formalized set of rules, as much as that can be done, and show examples, then we'll be well on our way. And we'll be mastering that right about the time that is no longer the current best method to trade. But it'll come back around, and hopefully...
ranges will always be a method, Michael. Like ranges, how can I say it? Yes, like you've given me at least 3 points there. The first one is we have never done a training on setting levels. You're right. It's good to put ideas together in an organized way so that you can back test and see in the past how levels worked together. Absolutely. The second one is there are some universal principles of trading that work no matter where the market is. And the most simple one is buy low, sell high. This is the simplest way to understand the market. Where that low is the trick. Finding that low and identifying it is the trick. And that's where the time frames come into place, because a low in a time frame might not be a low in a higher time frame. But that's another discussion. So ranges will always be of help. Like I've pattern traded, I've swing traded, arc traded. They are all based around ranges. They're all based around ranges. My patterns need to have their targets within ranges. If they don't fall within ranges, that means there's something off. Something is not going to go according to plan. So that's it. That's another great idea. Super, very good. So I'll leave you guys. Have a beautiful evening. Have a beautiful weekend. And if you have any ideas, let me know. Just to wrap this up, Monday we'll do a set level training, and we'll get the weekly trade setup out of it. And starting Monday, I'll start posting the 15-minute